Johnny, we've talked before about derivatives being tradable within a digital asset structure. Why do you think this is so important?
Well, the International Swaps and Derivatives Association, snappy little title, otherwise known as ISDA, have actually created a platform in conjunction with Linklaters, very, very large European law firm, to actually enable smart contracts to be used for derivatives. Now, this is a really important step forward, and it kind of follows on the back of the Law Commission actually asked Judge Vos, the Chancellor of the High Court of England and Wales, to give a ruling on smart contracts and digital assets. And he actually came out with his fellow lawyers and saying that smart contracts should be legally binding. And what we're seeing is the lines between traditional financial markets, sort of TradFi, and DeFi, i.e. decentralized markets, they're beginning to blur more and more and more. And whilst we've seen back in 2017, the CME have been offering exposure to Bitcoin using derivatives, now what we're actually seeing, companies like Bitfinex are using derivatives to give exposure to mainstream equities. So you can get exposure to 50 of Europe's biggest stocks or 30 of Germany's biggest stocks, with all the settlement happening in Tether. Now, why is this so important? Is because the Bank of International Settlement claims that the derivatives market globally is $650 trillion in size. Now, some say it could be as much as a quadrillion. So given the amount of stock, given the amount of interest, given the size of the derivatives market, the amount of trading, I don't think it's going to be very long before we see more and more derivatives actually being wrapped in a digital asset format. And this is starting to happen on the DeFi exchange. There's a company called Opium, which advertises itself as the non-custodial way to trade, and it's offering credit default swaps, i.e. a form of financial derivatives. So you can actually take a bet, take a position on whether Tether itself is indeed backed 100% by US dollars. So the building blocks are now in place, and people are able to start creating digital assets backed by derivatives. And I think that what we're going to see is, with the advent of 24-hour trading, with real-time information in terms of investors and exposure, it's going to give insight for regulators and compliance, greater transparency, but potentially much faster and cheaper settlement, and it'll give much stronger compliance and risk controls. And these will be overwhelming advantages and encourage the derivatives market to get more engaged.